Hey everybody, this is Lawrence from financialthing.com. Please let me know if you can hear me okay. Just give me a yes or a thumbs up in the chat because I just want to make sure this goes smoothly. This is definitely my first time. Excellent. Thank you very much, Dale. We appreciate it. I'm very grateful to be doing this for you. And I have to say, I'm totally a little bit nervous. I'm definitely no expert at the streaming, but what I'm here to do is give you as much value as I can and give you some insights in what's sort of on my mind right now about peer-to-peer lending and investing in general. But most of all, as I said on my email, I've been feeling really disconnected. You know, I started this online business in 2015, and it's really been a intense learning experience about how to do that. And one of the downsides about being online is there's just a big disconnect between, you know, you as a reader and me as somebody that's writing all of this information. I wanted to hear about what it is that you have on your mind. If there's anything you'd like to add or like to see me cover on the website, I'd be happy to consider doing that. I'm definitely open to any suggestions, but thank you very much. And it's nice to see you. Thanks, Keith, Kyle, Dale. And so, yeah, I'll answer questions as we go along. I have some notes here that are things that I wanted to go through with you. Okay, let's address Lendy. Lendy is a disappointment. I had a really good relationship with Lendy from the very start, and the problem with any business, and it's not just peer-to-peer lending, this comes along with any business, is you just really don't know for sure what's going on in the back end when the problems are starting to rise. And I felt like there was something going on, but I was also being told by the heads of the company and also the communications director, who I had great communication with, that everything was being fine and everything was being attended to as normal. Obviously, that turned out to be untrue. I did personally have money invested in Lendy and also collateral. And at the beginning, when I started in 2015, everything was really good. The promises were being made and they were being kept. And then, you know, in my personal opinion, what went wrong with Lendy? It's about generating profit for them. I believe that they tried to grow too quickly. They were taking on high fees from the borrower side, and they were charging the borrower high fees. And then I think at the end of the day, some of the assets that they took on were just not very good assets, and everything looked okay on paper in most parts. But, you know, like you, I'm no expert at evaluating big commercial pieces of property, and you have to have some trust and faith in that a company is going to do their due diligence and that they're going to evaluate things correctly. And I think they got it wrong in some cases, and it's just unfortunate. I also believe that there was some really high expectations with Lendy as far as dangling a 12% per annum interest rate in front of investors, and it's really easy to be clouded by that dangling carrot of a high interest rate because we just don't have that many places to invest money anymore. And somebody comes along and says 12%, 12%, 12%. We get these stars in our eyes, and then everything else just goes out of the window. And I think a lot of people were really taken by that, and it's a shame. As far as the outcome, I have no idea. I expect that there will be some capital losses. How much, it's hard to say. The administration fees are going to be a huge part in that, and hopefully they're not going to be too high, but it's sort of a wait and see. And also, by the way, this is why it's so important to diversify. Don't put all your eggs into one or two peer-to-peer companies. You've got to spread it around, and just in case something like this happens. And, you know, just on a side note, look at what's going on right now with Neil Woodford's fund. His unit trust was the be-all and end-all, and he was considered such a good investor. And then, you know, you saw what happened with him. So it can happen to any company at any time, just to have realistic expectations about what's going on with these companies. So I'm just going to read through some of the comments. Dale, thank you for liking the site. Negative impact that Brexit might have on small businesses. Totally agree. One thing I want to say about, you know, this Brexit situation is there's two types of fear, right, in life. I have an acronym for fear. It's future events aren't real. There's subjective fear and real fear. A real fear is like Lendy, right? We put the money into Lendy and the company goes out of business, and that's a real fear. Subjective fear is Brexit. We just don't know what's going to happen. It depends on consumer sentiment, depends on whether people get scared, start making crazy reactions to Brexit, and we just don't have any idea. Brexit could go well, could go unwell, and that is a subjective fear. And unfortunately, I don't have a crystal ball to know how it's going to affect the financial world. I'm sure it will have short-term impact, but one thing I would say is remember the financial crisis in 2008 and 9. We have short memories when it comes to investments, and the stock market has recovered since then, and people will recover from Brexit. It may take a while, but it's not going to be forever impacted and forever lasting. Let's see. How do you finding LoanPad? Presume, Keith, that you're asking how I'm finding LoanPad. I got to tell you, I've met with Louis several times in London. By the way, I'm in the US right now, which is why it's the middle of the day. So I have a house over here and come over here quite often. But I have met Louis on several occasions and sat down with him, and I found him to be extremely transparent. We've become pretty good friends, sat in coffee shops, talked about his business model, and I like what he is doing. He cares. There's sometimes a disconnect between these companies that are really big, and sometimes I get the feeling about, do they really care about entrusting that we have money entrusted with them? How much do they really care? And I just get a good feeling from Louis and what he's doing in LoanPad, and I love his low risk business plan that he has. He has a good plan to reach profitability very quickly. He doesn't have super high-end expenses because he's not underwriting the loans, and he's taking a first position over even his borrower, which is right now Hampton Capital. And everything to me lines up to being a low-risk investment, which is what I'm looking for nowadays. I'm not really trying to shoot for the stars when it comes to interest rate returns. So personally, just again, my opinion, I'm very bullish on LoanPad and what Louis is doing. Let's see. I'm so worried that I'm planning to completely exit from a significant portion of my peer-to-peer in October in favor of cash. Look, the deal with being worried about things, there's nothing wrong with being concerned, and there's nothing wrong with exiting. If you don't feel comfortable, you can always sit on the sidelines and wait. Peer-to-peer will be there again. If you decide you want to re-enter, you can do that. You got to do what's comfortable for you. Personally, I've been reducing investments in the higher risk companies. Things are a lot different now than they were in 2015, 14, and 13 when I was looking into peer-to-peer. I don't think there's anything wrong in reducing. I would say just stay diversified, if you are going to stay in peer-to-peer. And then you can wait and see what happens. And the problem with sitting on the sidelines in cash, I've been doing that for a while with the stock market, and you never really know where the bottom or top of an impact of a financial market is, and the emotions become your dictator to investing. Like if you were sitting in cash trying to wait for the bottom of the stock market, you would never know when that was. It could go down to, say, the Dow is 25, 26,000 right now. If it goes down to 20, would you actually know if that was the bottom or not? You'd never know, and you might just keep waiting and waiting for that bottom to hit and never have the courage to re-enter the market. So there is some downsides to it, but protection of capital, again, is a real plus for some people. So I don't see anything wrong with sitting on the sidelines if you don't feel comfortable. Do we have any chance of getting any money back from Lendy? Yes, I do believe that you will get money back from Lendy. There has been, if you read the administration reports, they're saying anything from 7% to 51%. It really depends what loans you're invested in. If you're invested in all the bad ones, the chance of capital loss are going to be a lot higher. But it's going to take a long time for that system and that process to go through the administration, because they can't just default and recover the loans quickly. The thing about peer-to-peer property lending is, a lot of people don't realize this can be a 5 to 10 year process. and it can take a really long time for a loan to be recovered, and that's just the way it is with property lending. I do think you will get money back. Hopefully you diversified and didn't put all of your eggs into the lending basket, which I talk about that a lot in the website. So who is better, LoanPad or Octopus Choice? I don't necessarily think either is necessarily better. I mean, so I made some notes when I went to visit Octopus Choice for the first time. I was really shocked how big Octopus Choice is. You literally go into this huge building, and I don't know if you're able to see my office tour when I first put it up. They actually made me take it down because there was some compliance issues that within internally. They didn't want me showing all the office on the video, so I had to cut it out. But it is a massive company. I mean, they have about 900 employees, and they have lots of different arms of the business. So it's not just peer-to-peer lending. They have healthcare, electricity, finance side, and then they have the peer-to-peer lending side. And I like that because it means that they have enough cash to float the peer-to-peer side, and it's a profitable company as a whole. So I'd say that's the plus side on Octopus Choice. The other thing I like about Octopus Choice is they show you the spreads. Like, they're very transparent with their loans. So spreads are really important when it comes to peer-to-peer lending and risk, because if you can see what a borrower is paying in interest rate and what you're being paid, so say you're paying 4% in interest as a lender and the borrower's paying 6%, you know that's a pretty low risk spread, which I like. And not a lot of companies show you those rates, what the borrowers are being charged. So I do like that about Octopus. Again, LoanPad is a smaller company. That doesn't necessarily mean that they're bad. They're just a newer upstart. But again, I like what both the companies are doing, and I'm invested in both. So I would say that's a pretty 50-50 shot. Yeah, 12% is what drew me into peer-to-peer. I have nothing at 12% now. That's exactly right. Do I miss Grimsby? The only thing I miss about Grimsby is the fish and chips. That's about it. The weather is not great up there if you've ever visited. Largely being put off peer-to-peer after 2 out of 8 of my platforms have gone sour. I've been lost more in funding secure than I've made across all platforms. Yeah, high risk peer-to-peer is high risk for a reason. Live and learn. I know it's unfortunate. I'm in the same boat. You know, we've all been there, and it's just tough. But I still think peer-to-peer has a really good spot in a diversified portfolio if you choose. Don't chase after rates. 12% is very hard to get. I think realistically, 5 or 6% is really what you're going to be looking at with peer-to-peer over the long run. So set those expectations realistically. We think about CrowdStacker. Tony, I really don't have any information on CrowdStacker. I've been in contact with the company a little bit, but I don't really have any information. It's something that I'm going to look at in the future, but I have a long list of companies that sort of higher up on my list right now. The risk-reward ratio. Yeah, risk-reward, it depends on, first of all, don't invest in anything that you can't afford to lose. I think for me it's worth it, but I don't put more than 10 to 15% of what I have into peer-to-peer. So to gain an extra 4 or 5% for me personally is worth it. You can look at the stock market. This is really interesting, but the volatility right now that's going on in the stock markets is you can put your money in and be at a lower capital amount when you start it. And we look at the FTSE, August 2018, the FTSE 100 in the UK was at 7567. Now it's 7125. So you're going to have some negative loss there. So am I happy to get 5 or 6%? I am. Is the risk reward worth it? Depends who you put your money with. I mean, there's some companies that I think are a lot safer than others, and you just have to be careful and go with your gut and look at online, look at the reviews, look at my website, and then make your own decision. But I wouldn't put too much in. I'm struggling with some of my loans. In Funding Circle, getting increasingly worried they might go out of business. Funding Circle, I wrote about Funding Circle months and months ago, how I was exiting. I think it would be highly unlikely the company would go out of business. They've got a lot of capital invested behind them, but it's never unrealistic to think it could happen. I definitely just use this as a warning sign. I mean, let's look at this. There are 100, I would say probably close to 150 different peer-to-peer companies. And there's going to be some good and some bad. It's just the law of numbers, and Funding Circle is one of them that maybe is struggling right now. I don't have any insider information. I've got very little invested through them. When I saw the issues happening very early on, I exited out. I wrote about it on the website. So, for those of you that are in Funding Circle, I would say keep a close eye on it. And if you feel uncomfortable, you can exit. Take an exit out of there. I think it's going to be a wait and see. At the moment, the share price, one thing about the shares, guys out there, don't invest in peer-to-peer companies themselves. Or, I say that with any individual companies. Not just in peer-to-peer. I don't like investing in individual companies. It's too high risk. So if you are thinking about investing in IPOs and things like that within peer-to-peer or any company, just be careful because it's extremely risky. And Funding Circle is, again, we've talked about that. What's my opinion on BondMason? Well, BondMason shutting down their peer-to-peer business, so it just wasn't working for them. And you can read about that on my website. I've written about that, so I'm not going to go really too much into it. They just have to be able to make a big enough spread to reward investors, and I don't think they were able to do that. I've spoken to Mr. Finley about that, and it just wasn't a viable long-term business plan for them. So rather than trying to plow forward and take more risks that they didn't need to, they decided to exit out of it, which, hey, hats off to Steve Finley for doing that. Presuming Brexit does shake up peer-to-peer, who do you think will come out on top after this? I think the companies that are going to come out on top are going to be the ones that have reasonable risk expectations and don't try to knock it out of the park with giving people too much in interest returns. Look, here's the bottom line. Whether Brexit happens or not, which it will probably, people are going to need to borrow money. Businesses need funding. Growth Street, I think, is on the right path, just in my opinion, of giving lines of credit to companies because they are going to need it. Property development, we're in the UK. We don't have enough housing. People are going to need places to live, and companies are going to need to borrow money to do that. So I just say, stay within a reasonable risk area. I don't like to name companies that I think are going to survive and not survive because I would be ingenuous. I don't know for sure. I could say where I invest personally. I am moving out of companies like Funding Secure. I'm reducing things like MoneyThing because I'm looking for lower risk now. I don't have the stomach for that high risk investing. It's just not worth it to gain an extra 4 or 5%. I've calculated actually that even with Funding Secure, some of the higher interest rate companies that after default you may end up making 5%, 6%, which would be the same as going with RateSetter, LendingWorks, Assets Capital. So really not maybe worth the extra risk. So do what's comfortable for you. If you feel uncomfortable, exit out. You have to take a little bit of a discount on your loan pieces. There's nothing like having peace of mind, and I wouldn't fault anybody for doing that. Instant access. Which instant access peer-to-peer account do I use? None of them are instant access. First of all, just don't ever think of them like that. Liquidity is never guaranteed. But I use RateSetter. I've got a little bit in the rolling market, not as much because I don't have as many concerns about them, even though they are not profitable yet. But I don't really use peer-to-peer as an instant access way. I've always looked at it as really long-term. And I'm just willing to take that risk. But LoanPad has a instant access. What they consider instant access. You got Assets Capital, and now LendingWorks too. You can access out of the, I forget what they call it. They've just introduced some new products that their 5% rate is sort of like an instant access account, so you can use that. I tend to go for the 5-year one. Just I've always thought of it as being long term, but there's nothing wrong with using the short term. Let's see. Baltic States. Yeah, I've had pretty good experiences with, honestly, Mentos has been my go-to, and look what happened with that. They then have an FCA, what I'm presuming is a Financial Conduct Authorities issue, to where they had to stop lending to people in the UK. So if you're living outside of the UK, I think the Baltic states is fine. I mean, you can, as long as you don't put all your eggs into that basket, and you diversify across multiple different loans and don't put too much into any single company, sure, it's worth the risk. I think you can get some really great returns. I was getting about 12.45% on Mintos, but I understand there is much higher risk being what type of loans I'm buying and the interest rates that the borrowers are paying. So I don't see there's anything wrong with it. Yeah, I just pulled the funding circle. The IPO is just terrible at the moment. What they issued at 440p, and now they're at 114. The fundamentals of the company weren't good to begin with. They were making a loss, and share prices tend to follow profits and losses. And I hope none of you actually invested in the IPO. I certainly didn't, and it wasn't anything that I would have ever recommended. So I'm hoping they're going to be able to figure out what they're doing over at Funding Circle. Again, I don't have any inside information on that. So. Relendex, I've got a good relationship with them. I don't have a whole lot of background on Relendex. It's not something I invest in myself. Property Land, again, same situation. I really don't have much information. Easy Money, I've tried to go visit them twice and haven't had much success. I'm going to try to visit Easy Money. Actually, let me write that down. In September. The brand's good, but as far as the background, see, the way that I evaluate companies is I go visit them. And here's a list. Like the last time I went, of the companies when I went to visit Blend, Property Crowd, Property Partner, Octopus Choice, and LendInvest. And I shake hands with the people that are either running the company or that are high up executives. And they give me as much transparent background information as possible. So I can't really evaluate companies that I haven't been to see. Some of them want me to come. I will try to go if they're in the London area, because I'm there for a couple of days. And Relendex is one that I would like to go see along with Easy Money. So I can let you know if you keep an eye on the website. What are my thoughts on MoneyThing, Steve? I like MoneyThing. I think that Ed has a good heart. I think he's trying to do the right thing. I think he's making adjustments and just realized that, again, the high interest rate form of investing is not maybe the best way to go for them, but they're adjusting to lower interest rate loans. It's probably going to be a little bit longer before they introduce those. But again, I don't have much of an inside track with them. I've tried to visit them, and that has not happened so far, but I will continue to reach out, and I would like to go sit down with Ed Pierce at MoneyThing and see what he's up to and see if I can get some background information for you. So hopefully in future. What's your opinion on Funding Secure? Where fraud is being committed on the borrower, shouldn't some responsibility lie with the platform? Yes, I think it should, but I think back to one of the first couple of loans that I had with Rebuilding Society that I considered fraud to have taken place. And I had a conversation with the guy that was doing the underwriting back then. It was in 2016 or 15. And they told me what they did to prevent fraud. And some cases they tend to get it right. In some cases it's wrong. People can fraud easily. They can fake documents. And there is responsibility I think that mistakes are going to be made in finance. A banker once told me that nearly all loans will run into trouble at some point, no matter how high or low risk they are. And I think that the fraud situation is always going to be a part of peer-to-peer lending. Again, just another example why you want to diversify it across many different loans, because if fraud happens, it's not going to really affect your portfolio a lot. Yes, in an ideal world, everything will be perfect. There'd be no fraud. All the due diligence will be perfect, but it's not. It's just not. So that is part of peer-to-peer lending. My first negative experience in peer-to-peer. It was, I believe, the Rebuilding Society was back in 2016, when the borrower didn't make the first payment. Yeah, I was like, how could that happen? So that was my first one. And it actually left a pretty bad taste in my mouth. I ended up exiting the platform. But I think I was very inexperienced back then, so I've learned a lot more. How did it affect my approach to peer-to-peer? I just became more cautious and diversified more. If you look at, I've got investments in about 15 or 16 different companies now, so if one goes down or I have a few bad loans, it's not going to kill me. One thing I wanted to tell you too is even the best loans can go bad. There was a loan on Lendy that I thought was probably one of the better loans I'd ever seen on peer-to-peer ever, and it went bad. It defaulted. So, and I wasn't the only person that thought that. There was a lot of advanced investors that liked the loan, thought it was a great investment. It just turned out it didn't work out. So any loan can go bad. Tony, I'm going to skip over the IFISAs because the IFISAs are they're the same as the regular products. They don't really offer any different products. You just make a higher return. So any of the peer-to-peer companies that you like that's not an IFISA would be this, beneficial for you in an ISA too, because you would just get a little bit more interest. But personally, I don't use them because I'm not allowed to, because I'm not in the country. I travel a lot, and so apparently I'm not allowed to use them as much. I've tried, and I don't use them anymore. So I would use things like RateSetter. I'd probably use LoanPad. I would probably use Growth Street as an IFISA, but it doesn't make much difference. As far as the products go, they're the same. So Keith, I already discussed the Mintos. I like them. I had money invested in them. They just stopped UK investing. So I didn't, I diversified. I didn't have too much in any one single company. Crowdlords, don't know anything about them, John. Not on my radar at the moment. Any thoughts on HouseCrowd? Beverly, yes. I've been to visit HouseCrowd once, but I've had a really good relationship with Fraser. I wouldn't personally put too much of my money into them. Again, I don't like the whole, buying properties, single properties, and taking shares in properties. I don't think is a long-term way to survive in peer-to-peer. Property Moose had that problem. For any of you that was in them, they decided that financially it wasn't going to be the best way. I think HouseCrowd has been fine. I've got some money in there. I'm sort of a wait and see person with them because I don't have as much experience, but Lending Works provides steady, reliable returns on, I don't know what that means, but on investment. Yeah, I like Lending Works. I think they're solid. RateSetter or Zopa in the long term. For me, RateSetter. Go look at my Zopa. I don't think Zopa's paying enough interest for what risk you're taking, so I exited out. And I think RateSetter's. I would like to see them make a profit. I went to visit them last time I was in London. I had a good sit-down chat with, let me see who it was. I have it written down. I sat with the CFO or the CIO and one of the head guys at RateSetter, and they're working on making improvements. They're working on growth. I'd like to see them make a profit. They will. They're in growth stage right now, so they're losing money. It's just the way it is in alternate finance. Value is not liable for so many issues with lending and funding secure. Can they be sued successfully? That's a tough one. Yes, I think they could be sued. Whether the peer-to-peer companies will sue them or not, it depends on liability. Now, think about valuations. They're just an opinion. There is some liability there, I think, in some cases, but it would be hard to prove in court, and it would be expensive for somebody like Funding Circle to take Funding Secure to take them to court. That's just money that investors are going to end up losing, so they have to be a little bit careful with how much they're going to start suing valuers. But valuations are a tough one because valuers can get it wrong. It's just an opinion. How's the process in getting in touch for interview and office visits? Do they find it strange that some guy writing a website wants to come and video the office? No, they're actually really open to it. They want to show you out there what's going on behind the scenes. So, I find it strange that they wouldn't want me to come and sit with them and have a conversation, because if you can see what's going on behind the scenes, it's going to make you as an investor more comfortable, and they're going to get more business out of it. So I haven't really had anybody that's been too difficult about it. There are a couple of companies that don't want me to do it. Usually it's liability issues and they're concerned about compliance. But most people have been really good about it. Especially, by the way, let me just say, Landbay has always been really good to me. LoanPad, Cufflink. Let me talk about Cufflink. I really like what they're doing over there. It is definitely a little bit higher risk, but they are very, very caring people. I visited them several times. They really care about you as an investor. They take great pride in trusting that your money is in safest hands as possible. And they've also been involved in bridging and lending for over 10 years. So even before they did peer-to-peer lending, they had a finance company and they financed with their own money. And they do have skin in the game, which I think is important. And for anybody that doesn't invest through Cufflink, I recommend giving them a really good look. When you go on the website, it shows you how much of their own money they have invested in each loan. I think that's really important. Octopus Choice, same thing. They have 5% skin in the game of their own money in each loan. And that's putting their money where their mouth is. Cufflink's the same. I think that's important. Invested in Landy, gone bust. What happened to my money? Lost forever. I don't know right now, Mark. You are probably going to be looking at some losses. Hopefully you didn't put too much of your entire portfolio into one company. So I wish I could tell you. I got money there too. I know it's unfortunate. Hopefully we'll have a better outcome than a worse one. Manual. Let me see. Peer-to-peer companies I like. Assets, LoanPad, Growth Street, Language, RateSetter, and Crowd Property. So far, not had any problems. Yes, one I would like to add to that list is Property Crowd. I like what those guys are doing too over there. Problem for me is it's a higher level of investment that's needed. I think it's about £800 per deal, and I just have so much spread across so many places. I don't have enough available finance at the moment to invest through them. And I think in order to diversify correctly, you'd want to be in about 10 deals. So you need to have a minimum of about 8,000. But I'd give Property Crowd a look. Really smart guys. They have a low cost system, which is great. Means that they could reach profitability hopefully soon. And low expenses are good for peer-to-peer companies. Now, technically, they're not really peer-to-peer. They do sort of discount coupons on property lending. But check out Property Crowd. Manual lending or auto lending, I prefer right now auto lending. Just time is important to me in my life. I'm 46 years old. I don't know how long I'm going to be on this planet for, and I have better things to do than sit and pick out manual loans like I used to do. They used to be a big thing for me, and now I would rather do other things. So I do manual lending, but not as much as before. I do manual lending through Cufflink and MoneyThing, Funding Secure, which again, I'm backing off my investments with those companies, but I did a lot of manual lending through them. I'm preferring auto lending myself. I'll take a 1%, 1.5% less. Oh, and incidentally, with RateSetter, for anybody that hasn't read the review, I was really surprised by only 7% of lenders do manual rate setting, which used to be a big thing because you could get a much better return. But now I've set mine on auto. I'm not seeing my returns really being hurt too much. So I'm liking RateSetter's auto lending. Spoken about email, about Funding Circle. Dave Pusik's taking over 90 days to sell loans. Yeah, I think it's going to take a while. So I think you just have to be patient. And again, hopefully you're diversified. I keep stressing that over and over and over again. Please, everybody out there, be diversified. Don't put too much money into any one company or any single loan. Spread, spread, spread. You like gold or silver at the moment? Depends. To where? Probably gold. I think gold's super risky. Look at historical prices of gold. It's a gamble, and I don't invest in gold and silver, which is funny because my dad used to be a jeweler, and but I think it's too volatile. So, like Bitcoin too, not for me. Do you invest with Funding Circle knowing that they must? Why would anyone? I wouldn't. I wouldn't invest in Funding Circle right now, so I'm not sure why. Maybe show me the condition. They would say that, wouldn't they? Yeah. I mean, think what would happen if they said, we are in big trouble, Funding Circle is in trouble, and they're just going to cause panic. So you have to have some trust and faith in the company is doing what they can to solve the issues. I wouldn't necessarily be freaking out about what's going on with Funding Circle right now, but it wouldn't make any sense for them to say we're in trouble and we're having problems. It would just lead to a mass problem. Would probably collapse their company by them saying that. So I wouldn't invest in Funding Circle. No. Hello, Martin. Yes, hi. I do remember you in Leeds. Welcome. You talk a lot on the site about investing in tracker funds, particularly the U.S. equity tracker, but isn't the issue that you're very exposed to the USD, GP exchange rate? Honestly, if the pound goes to polarity at 1-to-1, it still wouldn't mean that you would do badly with the U.S. tracker fund. So I kind of think of things on a 1-to-1 level. The fund is going to perform how the fund performs, but you're also investing in you're investing in British pounds anyways. So I'm not concerned as much about the exchange rate. And look at historically too. The British pound has always been pretty strong. And even if it does go down to polarity of 1-to-1 in the future, I actually would expect that over the long history that it will rise up again. But again, there's no crystal ball. I'm still trying to develop a crystal ball if anybody has one. Any thoughts on how to do it? Any thoughts on? Yes, Lending Works. So go read my review. I actually had a chat with Lending Works yesterday, and I think part of it is competition. They want liquidity is important. They want people to be able to have access to the money. And I think from a competitive standpoint, RateSetter has a rolling market. That's one of their biggest competitors, and they need to have something that allows people to exit out if they choose to do so. So I think it's for the investors' advantage for them to be competitive. Not sure necessarily why it would be to their advantage, but I think it's for the lenders' benefit and for them to stay competitive because it is a competitive market. My visit to Funding Secure, they explained the problem with development loans that are issued in tranches. The punters tend not to want to invest in the later tranches. They don't want to overexpose themselves, but that is a problem for the platform and the developer who expect the money to keep coming in. So we should invest a little and often. Yeah, I think that's really valid, Peter. I would say I personally don't worry so much about later tranches, but there is always a problem of, how do they know that the later tranches are going to be filled and that the developer is going to get the money? So they that's a valid concern for them. Filling loans from the lender side is always the big problem for a peer-to-peer lending company. It's like balancing that demand and supply. It is tricky. I exited Funding Circle 18 months ago. That's a smart move, I would say. But, again, I don't know what their back situation is. I've actually tried to go visit Funding Circle. Funding Circle, by the way, was one of the companies that said I couldn't come visit them. So take that for what you will, but I've been trying. Cufflink, AbleRate. I think AbleRate is David Bradley. I've had a good relationship with him for a long time. I think he's a good person. I think he cares about you as an investor. And again, it's a higher risk move. You're talking about loans that are 12, 13, 14, 15%. So just think about risk with it. You are going to have some high risk. Do you have a feel for the new management team at Funding Secure? I don't, because I've never been to visit them. I have asked to come visit them. I have not made it up there yet. I would really like to go up there. It's just always times difficult for me because when I'm in London, I'm sort of running around like a maniac, and I tend to be staying within the London area, and Funding Secure is not in a very convenient place. Not an excuse, and if you guys would really like me to make it up there to see them, I would definitely be open to doing that. Where's the peer-to-peer market going in the future? Do you think the banks will join the party? I think they already are, funnily enough. And I don't know if you know this, but there's a lot of institution money inside of peer-to-peer at the moment. You just don't see it. Lambay is a perfect example of that. They have a huge amount of bank and institution money. I don't think institutions are going to get involved with the high risk companies. It just doesn't make sense for them. They are not there to take risks for their customers' money. So the future, I think the future is okay for peer-to-peer. I think it's good as long as you go through the rules of staying diversified. Don't take too much risk. Make it a reasonable part of your liquid net worth. I have readers that have told me they've got 50, 60% of their savings in peer-to-peer, and I always tell them the same thing. I said, no, I wouldn't do that. I have 10 to 15, depending on what's going on, and I don't think it's smart to have 50%. That's like betting all your money on one or two shares in the stock market. Is company has issues and the share prices is going to drop. It's not a good idea. In an ideal world for investing purposes, you have cash, you would have some peer-to-peer, you would have some index trackers, you would have some property, and maybe something like a business on the side. I think that's an ideal way to diversify across investments. Each has its pros and cons. None of them are perfect. You know that. That would be ideal. I think the market for peer-to-peer is going to be fine as long as you are in the right companies. I think there's going to be a couple more failures. That's with any business sector, and not everybody's going to survive. So, and by the way, I have defaulted loans in companies just like you out there, I'm sure do. So I've one defaulted loan with Funding Circle. I had to chase them to start recovery after 6 months of inaction, and they still miss everyone of their own deadlines for updates by a month. Yes, it happens. It's peer-to-peer. Defaults happen, problems, they're not going to get it right. I mean, imagine a peer-to-peer company like Funding Circle is juggling literally hundreds and hundreds of loans, and they're going to drop the ball and they're going to make mistakes. It's just part of it. But, transparency is key. This is a problem that I have with Funding Secure. I was looking at some of my defaulted loans the other day, and I saw some of the updates were really slow, like 2 months back. And that doesn't make me feel good. I want to see an update about, even if you say, hey, we don't have an update for you right now, but we will have one for you on this date. I want to see that. And sometimes That doesn't happen. If I develop a crystal ball, Martin, I wish I had one. What might it show about Brexit happening on October 31st? I don't think it's going to happen on October 31st. That would be my guess. Just me. Had a similar experience. Funding circle. The last principal repayment wasn't made in March last year and still no resolution. Yep, happens. I noticed at the time the funding circle didn't let you in. I would advise to get out of funding circle while you can. Yeah, whatever makes you comfortable, Dale. I don't have a lot invested through them, and it's not somebody that I would put money in at the moment. So you can read my review, and I address all of that on there. Missed my question, sorry. What are your thoughts on aggregated peer-to-peer platforms like Orca? Fees are higher, but is it worth it for automated diversification? Yeah, Orca is actually Ian and I have spoken. I think he's a good guy. They have their own, look, they've got their own challenges when it comes to peer-to-peer, but if you don't have a lot of time, aggregated peer-to-peer is fine. You just saves you time. And yeah, why would you not want to give up some of your returns to save time? The only thing for me is I just have always been pretty hands-on with my lending. So I've never wanted to do something like Orca, but I think Orca is a good solution. I think there's good people running, and they're in Scotland, and Scottish people tend to be pretty good. So it was a joke. I do like Scottish people. Yes, so I would say it would be worth a look if you don't have the time to manage your own investments. Do remember this. I have some notes written down here about fees. So where is my note? Fees are interesting because I was doing some calculating today. I get a lot of questions about financial advisors. I talk a lot about that on the site. And a 1% fee can really cost you a lot of money over the period of, I look at things at 30 years because I always have a long term. And so I did some math investing today. If you were to put £100 as a base amount into a tracker, £300 per month over 30 years, at 7%, you would have £368,937. If you, instead of getting a 7% return, bring it down to 6%, you are down to £303,463. So 368 down to 303 for a 1% fee. Now, 1% doesn't sound like a lot, right? But over that 30 years, that's cost you £65,475. And this is why I'm always saying you don't need a financial advisor to invest. Save those fees, because not only are you paying them their annual fee, you're also paying fund fees. And a lot of people are paying, on average, I would guesstimate to be 2% a year in fees. And the more money you have invested, the more hurtful that's going to be over the long run. You could be talking about hundreds of thousands in fees that you're losing out, and compounded interest that could have been invested. So yes, a little bit of a fee isn't a problem, but it depends how much you're investing. If you have a lot invested, an extra 0.5% or 0.75% could be pretty hurtful to you over a long period. Let me see here. Yeah. Also, hey, if you guys, you get a lot of value out of this, and this is why I started Financial Thing, is to provide you with value. It's a business for me. I'm trying to figure out, I'm still inexperienced with business side of things, and online business is something I'm working to really make as perfect as I can for you. And just please tell your friends and family about what I'm doing. Share the website with your friends and families, and spread the word so I can keep on doing this for you guys, because I really enjoy it and I want to be as helpful and transparent as possible. So share with your friends, tell everybody, and support me, as much as you can. I appreciate everything, and I appreciate you being here and all the readerships. Let me just go back through and see if I've missed any questions here. Look, Have I read anything about the new peer-to-peer multi-ISA platform? Paul, no, I have not. I just found your email. My pot spread, third cash, third equities, and the third peer-to-peer spread over 8 lenders. Yeah, Chris, again, what I would say about that, so you're talking, Chris is saying he has a third of his pot spread in cash, a third in equities, and a third peer-to-peer spread across 8 lenders. I think people ask me how many companies they should invest through. I think 6 to 8 is a really good number, and not too much weighted in any particular company. That's the best thing you could do. I also say whatever is comfortable for you to put in, whatever. If you were to lose all of your peer-to-peer money, would it put a detrimental hurting on you? Think about that. I don't think that that's a high possibility at all, very low. But I always think about that. Like with the stock market, if you have an index tracker, it's probably never going to go to zero. So there isn't risk of actual complete total losses. But with peer-to-peer, there is a possibility it could happen. So please think about how much you're willing to risk when you put your money in and spread it. Do I have any eyes on new peer-to-peer platforms? I've actually been looking into ethical lending recently. There's a little bit of a tug on the heartstrings when it comes to lending money. And it's funny because I talk a lot about debt on Financial Thing and how I don't like seeing people in debt. So there is always that moral tug about, should we be lending money to people if we don't really believe in debt? But sometimes I feel like I'm helping businesses, so there is that relief. But new companies, I've been looking at a company called Trine, Trine, a little bit. Property Crowd is sort of a newer one on my radar, but I haven't seen anything that's popped up recently that has really been of interest. Bit of a wait and see at the moment, but if there is anything new that I find interesting, I will let you know. Archover has been on my radar. Problem with them is, again, I think they have 1,000 minimum per loan, so you'd be looking at 10 grand plus to be really diversified with Archover. So, plus I have 16 invested right now. So, but I am going to be looking into new ones towards the end of 2019. Do I think Assets Capital is a good place to invest? Yeah, I do. Just keep an eye, again, on the default levels. Don't invest too much and stay diversified. I have money in Assets Capital. If I didn't think it was a good place to invest, I would have exited. Getting out of an ISA is not easy. It's impossible to move the ISA elsewhere until the loans are sold. HMRC insists that ISA transfers take no more than 1 month. Yeah, I wonder if that's written in their terms and conditions about funding circles, IFISC, about that the loans would need to be moved. But it makes sense, Marty, if you think about it. They wouldn't be able to move it because you can't move it if the loans are inside the basket. And I think that's a really important thing to remember if you do want to move a ISA out of a peer-to-peer company, is the loans are going to have to be sold before you can move it. So that's a really great point. Thank you for bringing that up. Auto Manual, I've spent lots of time reading documents with assets, but I've found regardless of things like low LTV, the Assets Capital, I cannot avoid some bad selections. Now I stick with auto. Yeah, George, thanks for that. Great point. Even the most advanced investors are going to pick bad loans when they're doing manual investing, so that's just part of it. It's a great reason to stick with auto investing, just to get that diversification spread. I would like you to get at the FS people, as the communication updates are terrible. Investors have a right to know what's going on. Yeah, they're not doing particularly well, and probably what I'm guessing is they don't know anything, so they don't want to write. They don't have anything to write, so sometimes the default processes are really slow going. And please try to remember this. It can take a really long time for a property default to be resolved. Sometimes it's quicker, Sometimes they're slower. Borrowers can do some really weird things when they're going through default. They can mess the courts around. It's happened. Able Rate had a loan where shipping containers, and every time they would try to go to court, the borrower would pull some ridiculous argument, and it would get delayed and delayed and delayed. He would then not show up to court. Borrowers do things, and sometimes these companies don't have any updates. What are your views for older investors over 75, Tony? Depends on how much you need the money. I wouldn't take any great risks at 75 if the money isn't really super important to you. I'd say Peer-to-Peer is fine. I would say low risk the older you are. Same with the stock market. I think as you get older, you want to be taking less risk, because if the market goes down, you don't want to have that big loss of capital should you need that money when you hit retirement. So hope that answers your question. I didn't know about the HMRC 1 month ICE rules. If I were you, I'd prioritize exiting. Funding Night said they would be offering new loans after takeover, but have been running down the existing loans for about 18 months. Yeah, I don't know what their situation is, but they, as far as I know, they were taken over. They could be restructuring the loan process. Who knows what's going on in the back, but I can write down to look into that for you and see if I can maybe have a call with them or a Skype. That's another thing too. If there's companies you want me to look into, I can set up a Skype call and write about what I find. Don't write off Bitcoin, Hunter. Yes. I tried telling my friend that he bought in at 15,000 US, and he was not happy when Bitcoin went to $3,000. So it's a tough thing to recommend because it is so volatile and it is gambling. You know, I wouldn't write it off. I think blockchain, I mean, of course it has a place in banking, but as far as investing in it, extremely volatile. I mean, anything that's going from 19,000 US down to 3,000 US is horribly volatile and risky. I looked at it when it was $2. I'm kicking myself for not buying it, but no crystal ball. Thank you, Dale. Thank you for that. I really appreciate it. I do the website, for you readers, and I hope you get a lot of value out of it. And thank you for coming and joining me. James, hey, just know this about me too. I'm in the same boat as you people for most part. I'm not the most, expert, knowledgeable person in this. I'm not the most articulate, but all I do is I try to give you the information that I know and try to be transparent. And that's all I can do. I'm going to get it wrong. I've gotten it wrong. If I didn't get it wrong, I wouldn't have been in lending and collateral. I went off the information that I had. I had talked to the people in charge, and, we are going to get it wrong. So don't be hard on yourself. If you are invested in those companies, you are going to have ups and downs. Just think of it as the long run, though. Don't think of it as a one-year game here, where it's kind of like a game of poker. I don't know if any of you are into poker, but I used to play a lot of poker. I've actually written a book about poker, but we see poker as a long-term game. And what you want to do is, with peer-to-peer, be thinking about what your return over a long period of time is going to be. If you exit because you had a bad experience, that's not the way for long-term results in investing in peer-to-peer or any other thing. It would be like, selling out of a share when it goes down. The key to making money, if you're not a trader, is to stay in for the long term. So peer-to-peer is the same way. Property Crowd Property has a minimum investing of £500 per loan. Have to leave. Thank you for joining us, Malika 1951. Thanks for sharing your knowledge and wisdom on peer-to-peer. I've invested over 50K in different ISAs. No problem so far. Hey, Chica Boy, I wish you the best of luck. Would you say Ted Turner tried to start a wrestling company again would lose money and just crazy to compete with Vince McMahon? I think it would be crazy. I don't think it's hard trying to compete with the best. The WWE is the best company. I actually have a wouldn't say he's a friend, but he's in the WWE, and I don't think you can compete with the highest brand names. Sometimes it's very hard. They've been around for what, 30, 40 years. So I think it would be insane for Ted Turner to do that. Chris Monk, thank you so much. I really appreciate that. I have to leave as well. Thank you, Chris. Hope you enjoyed it. I've been biasing my peer-to-peer investments towards amortizing loans. I feel it limits its potential losses. Yes, that's a really great point, Sasha. Is I like loans that amortize. That means that the loan principal is reducing the longer the loan is about. Some companies don't amortize. Did I say that right? Amortize. And yes, the risk is higher because the loan balance stays stagnant. So there is more risk. The lower the loan balance, the less risk for you. If it defaults later on, you have a lower loan balance. Thank you, Arthur, for joining us. Are there any other websites or resources that you recommend? Peer-to-peer finance news. You got Peer-to-peer Independent Forum is something that I think is good to use. There are a couple of other peer-to-peer blogs. Actually had some issues with, I don't know if I should talk about this, but there was an issue with a peer-to-peer blog out there who plagiarized a lot of the information from my site. So, that's going to happen. And I think, don't they say imitation is the biggest form of flattery? So it happens. But there's some good blogs out there. Just Google it. Will I do this again? Yes, I will do this again since so many of you showed up and supported me. One thing I would ask for you, please drop me an email and let me know what you would like to see on the website. Are there things that you feel that I'm missing? Are there suggestions that you have that you would like to see me add that would make you visit the site more often? And I'm happy to go ahead and research into companies. Now, one thing I will say that it is just me on my own doing the website, so I have limited time that's why I don't cover all the companies that you're asking about. I just can't, but I am trying to cover more of the new companies, and I also have to make sure that I keep the ones that I have on the website up to date, and sometimes it can be a challenge. Let me know, is anybody here invested in Property Moose? Because I have some information about that, if anybody is wondering about that. So what else can I tell you about Property Partner? I actually like Blend too, Blend Network. I went to visit them, and they're not really very well known within peer-to-peer, but I like their risk. Blend targets really low risk housing deals in the north of the UK and Ireland. I like the guy who's running it, Jan. He's really smart, and he really wants to keep the risk as low as possible. And risk is hugely important. Like I said about spreads, you want to know what the borrowers are paying versus what you're being paid in interest, and that can be a good indication about how risky peer-to-peer loans are. If you can, look at loan books. A lot of the companies don't have the loan books online anymore, and they don't want you to really, I don't know why. RateSetter used to have all of their loans online, and then they took them down. So that's why I like Landbay, and I like Octopus Choice, because I do get to see the spreads between what the buyers, the borrowers, and the lenders are being paid. So Property Partner has made some adjustments recently, which they did for financial reasons. So yeah, if you have any questions, anyway, I will be doing this again soon. And since there is not too many more questions, I'll be wrapping this up in a minute. Yeah, Dale, I can definitely send out a email when I change my top 5. I will write that down. Then you can get a update. For anybody that doesn't know, I have a top 5 peer-to-peer lending list. You can download it by just going on my website and entering your email address, so you can stay up to date with what I'm doing. I also send out monthly emails showing you where the best cashback offers are. By the way, cashback right now, Cufflink is doing an awesome cashback offer. They've been so generous to me with that. You got to invest a minimum of £500. You get £100 bonus. I mean, you talk about 20%. You're not going to get offers like that too often in peer-to-peer, and I think it's a great reason to try them out. RateSetter has a good bonus right now. Let's have a look. Who else? Cashback. Well, cashback is great because it means that your returns are high because you're getting that extra bonus. So it means your risk is being reduced somewhat. Funding Circle has one, but yeah, we all know about that. Growth Street, you can get up to £2,000 cashback right now with Growth Street. I like Growth Street a lot. I would say the owner looks like Harry Potter, the founder, Greg, and I love going to visit them. They've always been really kind to me. So yeah, check out that Cufflink offer at that £100. And they do a higher, the more you invest, the higher the cashback through Cufflink. So you can sign up through my website. If you would do that and you are signing up for Cufflink, I would greatly appreciate that because that benefits me. I have a meeting too with Cufflink, by the way, in September, and we're going to get updated on what they are up to. Let's see who else has a good cashback offer at the moment. LoanPad, you can get up to £150 in cashback. It's a good offer too. Property Partner has scaling bonuses up to £1,500. RateSetter has their bonus. I believe it's £100 on a £1,000 investment, which is great. And Zopa, I believe, is £50 when you invest $2,000. Zopa has been, for me, a interesting one. They've been around for a long time, but I just don't think that the rewards that you get paid as a lender is really worth the risk. I would want to be paid sort of in the 6% range rather than low to mid 4s for the risk taking. But they have been around. You know, they've been through the recession in 2008. So that does say something. Whether they would be okay through another recession, that's anybody's guess. Yes, Dale, that is a good Cufflink bonus. Any views on Capitalize? Yeah, I've been in communication with them, and I think if I'm correct, I have a Skype session with them this month, but I don't have too much more information. I'm doing some discovery through them. They've always been really good with that communication with me, and so yeah, good so far. But again, don't invest through Capitalize. Assets Exchange, I don't have any information on, and I do like except Property Crowd. So yeah, that's really about it. So I'm going to wrap this up. Thank you again for coming and spending an hour and 8 minutes with me, and I will do this again soon. And again, please visit the website. Please subscribe to my YouTube channel. It helps me out a ton. And hit the little bell for a notification. That way you'll be notified the next time that I do something like this. I will email you too if you're on the email list. And keep visiting the website. Let me know how I can help you. I'm here to really help you. I'm an investor alongside of you. And we help each other, right? I'm going to be doing a Facebook group too, which will be a private Facebook group for financial thing readers, and we can all discuss what's going on with peer-to-peer. But you're most welcome. You guys have an amazing week, and be prosperous and be healthy, and don't spend too much time investing. There's plenty to see and do out there, and health is most important. Happiness, spend time with your family, and I will end it there. Guys, thank you so much. Take care.